Thank you all for joining us for yet another extravaganza in Contino's Contino Live series. We're absolutely delighted to be joined today by Google as part of our webinar on operational resilience and the role of cloud within the financial services sector. But before we sort of start off, I just want to thank all of you for joining in and tuning in so early in the morning. You might not actually be aware, but initially when we were collectively planning this event last year, our intention was actually to run this as a breakfast briefing in Google's lovely offices in London. However, unfortunately, due to the fluctuating changes with COVID restrictions and the rest, we thought it would be more prudent to do this remotely. Unfortunately, we couldn't change the time, and we could meet you all in person, but at least you know what were the intentions behind us running this session this early in the morning. Please do go grab your breakfast, your coffees, your drinks, whatever you need at this time in the morning, as we appreciate that it is quite early on. But that being said, we will now kick it off. So thank you all for joining. Today we're delighted, absolutely delighted to be joined by Google. And we wanted to talk everyone through operational resilience, which happens to be such a key topic in the industry at this moment in time, especially as financial services institutions are trying to grapple between all the key priorities they need to address when it comes to continue to innovating and meeting their customer demand, but also continue to evidence against their regulatory requirements and making sure that they continue to provide an operational resilient set of services to their customers. However, we'll certainly get into the meat of the matter and the details in a second. First and foremost, I'm absolutely delighted to be joined by two subject matter experts in this field, by David Knott from Google Cloud and Pedro Borracha from Contino, and we'll get into their brief intros into a second. First and foremost, a massive welcome from myself, your host. I'm Deepak Venti. I'm the Director of Strategy and Transformation at Contino. I've had the absolute pleasure of working at Contino over the last 3 and a bit years, and having helped some of the world's largest financial services institutions, more particularly in the UK, help pave the way for cloud adoption and digital adoption within the industry. So I'll be hoping to share some of my lessons learned and some of the experiences that I hope that you can all take through your own personal organizations. Before we go into the actual detail, I'd like to introduce David Knott from Google. David, would you mind doing a brief introduction to yourself, please?
Yeah, so sure. So hi everybody. Great to meet you all virtually, and thank you all for joining. So it's interesting. There's a picture of me here wearing a tie. I don't think I've worn a tie for the last 3 years or so. So today I wore my Grace Hopper t-shirt to give a shout out to Grace Hopper. So if you don't know who she is, then stick a question in the questions. So I work at Google. I'm a digital transformation officer. What that means is that I work with our very largest customers in the EMEA region who are looking to work with Google to help them transform in multiple dimensions. So that might be technology, people, culture, innovation, or new business models. I've been at Google for about 1.5 years. Prior to joining Google, long career in enterprise technology, mostly in the financial services institution. So for those of you on the call who are sitting within banks or insurers or other financial institutions trying to figure out, how can you get to the cloud safely and tackle some of the big questions facing you, I've also sat on your side of the table and worked it through as well. So I hope to share some of that experience today.
Perfect. I'm really looking forward to hearing your experiences there, David. And Pedro, would you mind doing a brief introduction to yourself, please?
Thanks, Deepak. Hi, everyone. Good morning, and thank you all for attending at this hour. My name is Pedro Borracha. I'm a principal consultant at Contino. I am part of the security practice, and I specialize in governance, risk, and compliance after almost 20 years working on InfoSec in various heavily regulated industries, financial, of course, but also oil and gas, gambling, insurance, among others. And like David, I've also been on that side of the table. So I'll do my best to bring my experience and lessons learned from the past to you all today. That's it. Back to you, Deepak.
Cheers. Thanks a lot, Pedro. Before we go into the actual meat of the matter, folks, I'm sure everyone on the call is more than aware of Google and Google Cloud and the fantastic investments Google continues to make in that entire space. But for those of you who might not be aware of Contino, we are a digital transformation consultancy, and we've always had the mission and the mantra in helping some of the world's largest, most heavily regulated enterprises become agile, fast, digital, and competitive. Over the last couple of years, we've done that by helping organizations not just advise on their strategy and their approach, but we're also quite keen on making sure that we put our money where our mouth is. So we therefore help them build upon those actual strategies that we've helped design with them. And most importantly, we always believe in the fact that organizations need to be able to own their digital destinies, and therefore we help them upskill on whatever is it that we're building with them. And we sort of do this quite holistically when it comes to looking at transformation and change within an enterprise, by combining and bringing together the power of cloud, DevOps, software, modern ways of working, data, together to help organizations not just transform their operating model, but also more importantly, build a culture of engineering excellence. And part of the reason actually why we're doing the webinar today is, given the importance and our role in working with large, heavily regulated enterprises, financial services happens to be a big focus area for us. And we've worked with some of the world's largest, most well-known financial services institutions. So as part of today's session, some of you actually happen to be attending today's webinar as well. We're hoping to be able to share some of the lessons learned and approaches that we've seen work well with those organizations, and also make sure that you're able to take some of those learnings towards your own organizations. So I promise that will be it with regards to marketing slides, and let's get into the meat of the matter. So what is it that you'll be looking to hear from us today? So given the current importance of operational resilience within the entire sector, we'll actually do a recap of operational resilience in the UK. What are some of the key dates, some of the key milestones for you to be aware of, and actually how has the policy evolved within the industry since it was announced last year? We'll go through some of the key trends and some of the industry regulations that we're seeing impacting this entire domain, and what's the critical reason behind operational resilience being so prevalent in the industry right now. And then what we'll do is we'll actually go into the impact of cloud adoption on operational resilience. As all of you might be aware, cloud adoption continues to be quite prevalent within the industry, and you might also be aware that it doesn't directly sit or isn't directly impacted by the operational resilience policy. However, there are some complementary lessons learned there that can be used, so we'll cover that as well. David Knott, as he sort of talked us through the fact that he's had the experience sitting on the other side of the table, working with the regulator and interfacing with the regulator, better said, we'll be looking to bust some of the myths on operational resilience. And last but not the least, we'll leave you with some key patterns and practices for success that we hope you could look to adopt and take with your organizations. We will have Q&A at the end as well. However, if you do want to ask any questions, please do not hesitate, and you do not have to wait till it's the end of the session. If you wouldn't mind popping a question in the chat window, we'll constantly have someone monitoring that, and we'll see if the best time is to answer it during the session itself or right to the end. So please don't be shy, and we look forward to having that additional interaction with you. And before we actually get into the details of the meat of the matter, we're always quite keen on making sure you can all get your key takeaways up front. However, we'll be delighted if you stay towards the end of the session. You know, we all know that regulatory scrutiny on operational resilience is only going to increase. Safe to say, as the role of financial services and embedded finance continues to be critical in our day-to-day life as citizens, operational resilience is going to be by far the most prevalent thing in the industry over the next coming years. And I think as an entire industry, the financial services sector has an opportunity now to build what we'd call customer-centric resilience, right? As a first-class citizen in everything they do. Safe to say, even based on the recent updates that we've seen by the FCA, a lot of organizations still haven't been able to grapple what operational resilience means to them and being able to separate their systems view compared to the impact to their actual customers. So we'll touch upon some of that as well. And you know, the beauty of operational resilience, at least the way in which Google and Contino see it, is that we see this being as much as an engineering challenge as we see it being a challenge when it comes to compliance and risk. So we will go into some of the details behind that as well. But engineering is actually one of the key things and key approaches that organizations can look to take away when building out their operational resilience. And last but not the least, you know, we're all very acutely aware the fact that the adoption of cloud within the sector frankly shows no sign of slowing down. And actually, using the current policy and the current requirements of operational resilience, organizations can look to build what we call a fintech core that actually has resilience baked in its very nature. And actually, the adoption of cloud actually plays a critical role in being able to build what that fintech should look like. So that will be one of the key takeaways and one of the key aspects that we look to share with you in more detail as well. So why is it that we're here, right? I think it's safe to say on the call, we've got people who happen to work for the financial services institutions themselves. You also happen to be partners who work with those organizations. But I think it's safe to say there are a variety of industry forces that are now driving this change within the actual industry, right? We know for a fact that adoption of cloud and digital within the entire financial services and insurance space continues at a rapid pace. On the other hand, we know that consumer expectations and choice couldn't be any higher at this moment in time. And frankly, we know that increased scrutiny and pressure from supervisory bodies and the regulators continue to remain over there, and organizations are under increased pressure in making sure that they can remain operationally resilient. But last but not the least, and arguably I would say it's one of the most important ones, all the incumbents currently are seeing the challenge where business models in financial services are either being unbundled or bundled, and organizations who are unable to react to this, they're being aggregated upon with techniques such as open banking, as well as other innovative business models that the incumbents frankly can't innovate quick enough against. And all of these industry forces and pressures are driving this change with regards to the operational resilience mantra. And existing incumbents at this moment in time face a huge dilemma, which is, do they focus just on resilience and do they just focus on their regulatory requirements, or do they actually use this as an opportunity not just to increase their compliance and resilience posture, but also use this as an opportunity to innovate? So although I appreciate the title of the webinar is Innovation versus Regulation, actually we see these movements and these industry forces being quite complementary to each other. So let's do a recap on actually what is the current state of operational resilience in the UK. So for those of you who might not be aware how this entire notion came about, over the last couple of years, we've seen some fairly significant failures in the financial services sector. This might be with regards to downtime of services. This might be due to a result of mergers and acquisitions happening in the sector, and thereby customers being impacted due to some of these business changes. And safe to say, a combination of politicians, but also consumers, were all keen to make sure that that impact to customers was frankly unacceptable. And largely, a lot of these were driven by IT crashes and outages, right? And therefore, the regulators had to step in to making sure that not just the work that organizations were doing with regards to the move to cloud, but also the way in which their IT services were being managed was something that was held to more account to those organizations, and that they were able to make sure that the services that they were providing were operationally resilient. So the FCA and the PRA, they started off activities all the way from 2018, looking at what should be done in this space. And towards the tail end of December 2019, there was an open consultation that was run by the supervisory authorities on making sure that operational resilience is something that's considered first and foremost by the organizations, and looking at the impact tolerances for the critical business services that these organizations provide to their actual consumers. After that consultation phase, in March 2021, so roughly this time last year, there's a policy that was published on operational resilience and the impact tolerances for important business services. Roughly a year in, this is the time organizations have had to in effect implement what their impact tolerances is going to be and define what their key business service lines are going to be. So for those of you not aware, in roughly a couple of weeks' time, firms and financial services institutions should have identified what their critical business service lines are. They should have had to have set their impact tolerances, and they should have mapped and tested these impact tolerances to a sophisticated level that enables them to identify vulnerabilities whilst also preparing for their self-assessments. Safe to say, as part of the entire open discussion with the supervisory authorities, firms have realized that they certainly needed more time, so there has been more leeway in the implementation periods, which has allowed organizations to focus on, first and foremost, defining what the service line, those business services are. And now, post-March, we go into 3-year transition periods where now firms need to have performed their mapping as well as the detailed testing, such that operational resilience now sits very much in the core of what they do, as opposed to just a compliance activity. Again, if you'd like to understand more detail about this, we can certainly talk us through in the Q&A. You've got a fair amount of resources on the FCA's website as well that talks about this in more detail, but this should give you all a brief recap of where we currently stand with regards to operational resilience within the industry and what are some of the key dates and milestones to bear in mind. And I think this is where I'd certainly like to go into our first question, because a lot of times organizations themselves don't necessarily have an appreciation or actually tend to confuse what operational resilience even is. And Pedro, I'd certainly like to bring you in here, because a lot of times organizations confuse between what does come within the scope of operational resilience versus what doesn't. So would you be able to reset that for our audience and sort of talk us through what does and doesn't classify as operational resilience, please?
Absolutely, Deepak. So there are several definitions of operational resilience out there. According to the FCA, operational resilience is the ability of firms and the financial market infrastructures and the financial sector as a whole to adapt, recover, and respond to operational disruptions. There are other definitions, but the common ground on all of those is that operational resilience is an outcome that comes as a result of effective risk management. So operational resilience is not about your firewall. It's not about business continuity planning. It's not about disaster recovery. One of the things that I would like to focus on is that according to the FCA, it's the financial sector as a whole. So when companies start defining their important business services on their self-assessment, deadline is almost here, there are mistakes being made. Like your internal HR, it's extremely important for you. I understand. Does it affect the financial sector as a whole? No, it doesn't. It's not an important business service. For you, it is, but for the whole and for the UK's operational resilience, it is not. This came from some discussions that we had with the FCA and some webinars that we attended. We know that right now, people should be submitting their self-assessment and defining their important business services. I know that 2025 is the ultimate deadline, but for 2022, we should already be somewhere and we're still in the beginning. So this raises some alarms for me. If we can't even define the scope of what is operational resilience, then that compromises everything that's going to be done in the near future. So I think that the definition of operational resilience as the foundation for everything that's going to be done, it is extremely important. I would say that every company that is on this journey should double, triple check what operational resilience is, because many companies that I'm seeing are going on a road that it's not accurate, and the FCA knows about it. The FCA for now is being passive about it because this is the first year, but gradually and surely they will look into the companies in more detail. And yeah, we should all be aware of that.
And Pedro, on that very point, you know, at times we always tend to see organizations confuse operational resilience with business continuity planning or even disaster recovery, right? It would be good to get your insights on sort of resetting some of the expectations and differences between one and the other.
What I said about the HR not being an important business server as just an example. Companies need to prioritize the effect on customers and markets rather than their own company. This is like the foundation for everything that's going to be done from here onwards. Regarding the impact tolerances, which is also a requirement for next month, the plan is to avoid breaching the impact tolerance rather than focusing on how you'd recover from that. Companies need to prioritize the effect on customers and markets, and that is as simple as I can define it. You need to avoid using your recovery time objective as your impact tolerance. That's also not the right way to do it. And you should show your thinking as how you've set them to the FCA. You can't just submit spreadsheets. Okay, we all came from the times where spreadsheets were ruling the world, but now it's a bit more than that. You need to start defining the business services, the impact tolerance, and even though we still have 3 years, time is running fast. As we all know, the last 2 years just flew by us so quickly. Do you want me to talk about key components or what else? Because I could talk about this for hours, so you tell me.
we can certainly go into that in the next section, Pedro. Thank you. I mean, on that very note, David, I sort of wanted to bring you in because, of course, the team at Google Cloud have done a phenomenal amount of work, not just responding to these policies from the regulators, but also stating what their perspective and what Google's approach to operational resilience actually looks like, which we'll of course go into more detail as well. But it'll be great to understand from your perspective, how is Google looking to tackle and work with their partners when it comes to operational resilience in this sector?
Sure. So thanks, Steve. I think the headline for me is to say that at heart we're an engineering company. We treat this as an engineering problem, and part of the reason I put it that way is just echoing what Pedro said is, if you think of this as an engineering problem, the requirements have just elevated. So this isn't just about reinforcing existing continuity arrangements or tightening the policies on the firewalls or adding an extra few servers. This is an engineering problem where what we're saying is that companies in the whole sector, and with the whole financial sector, that often means actually the whole economy, depends on the continued operation of these important business services, and those business services are subject to a bunch of threats, and there's no point in wishing those away or pretending they won't happen or pretending all our existing arrangements will deal with them, because I think it's clear that we won't. And I think Pedro referenced the last 2 years. I think the last 2 years is an example of the things that we never thought would happen will happen. They will happen in our lifetimes. We will be subject to these threats and events, and we need to be able to respond to those. Now, I think it's great the way most companies were able to respond to the pandemic, but I think if they put their hands on their heart, I think most companies were scrambling somewhat, because I don't think most companies actually had a really deep, adequate pandemic response plan in place now. I think now people will, but that's not the only threat we'll face. So when I say we look at this as an engineering problem, we take it that the threat is given as red, the risk is taken as red, the regulation is taken as red. What we then try and do is knuckle down and go, okay, what are the parameters and constraints we have to work with? What are the features of the technology we can use to try and meet these goals? What are the materials we and our customers have to hand? And we have a lot of materials to hand because we've got a global hyperscale network. And then we get down to the business of designing, building, and operating that. One of the key things that's led us to doing Google is to really double down on our approach to two things. One's multi-cloud and the other's open source, and we'll touch on these a little bit later on. But effectively, that means us accepting that if we're really going to respond effectively to operational, very stringent operational resilience requirements, we can't really assert that most people will be able to meet that all within the constraints of our platform. So we have to accept that we have to extend our boundaries outside our platform in various ways. And again, that's great because that gives us a real gnarly, interesting engineering problem to get to grips with, and that's what we're doing, and that's why you're seeing things like open source frameworks and products like Anthos and things now come to market. So, and I'd encourage, that's how we think about it. But I encourage technologists on this call to think about it the same way. There's no point in denying the reality of the regulations; they are just there. What we now have to do is get on and figure out how do we build the solutions that respond to them.
And David, you touched upon quite some interesting points there, right? Because we touched upon the fact that it's more than just the risk component that organizations need to manage. But what I sort of found quite interesting was when we look at the mapping activities that organizations have been asked to do, or firms better said have been asked to do by the regulator, a lot of them initially had a fair amount of questions with regards to what should that mapping actually consist of, right? And the regulator provides some details that you've got to, look at your resources, people, process, tech, and facilities. And what I sort of liked quite a lot from a Google perspective was the way in which Google mapped it out was to look at key risks across third party, technology, environmental, cybersecurity, geopolitical, pandemics, right? And as I sort of mentioned early on in the webinar, yes, we're not here to talk about concentration risk, or we're not here to talk about outsourcing a third-party risk, which is where cloud adoption more particularly sits in from a regulatory standpoint. It certainly is a key aspect to consider as part of the wider set of risks that organizations need to manage, right? So it would be good to get your perspective on actually organizations who are already looking to move to cloud already might have, say, either a cloud-first strategy or cloud is a key part of their business strategy in itself. How is this component of third-party risk managed by these organizations, and what is the role that that has to play as part of their wider operational resilience framework?
Yeah, thanks. It's a good question. I think the we talked about trends a bit earlier on, and I think one of the key trends in the industry is an increased focus on this element of third-party risk. And I think part of the reason for that is companies, financial services companies have always built their solutions out of third-party components. Very rarely is it that companies write their own operating systems or they build their own servers, and we do, but we're not a bank. So it's rare. So everybody is dependent on third parties. I think the advent of cloud has just really crystallized thinking on exposure to third-party risk, because cloud is choosing to take critical components of infrastructure and have a third party run them. I think the way I tend to think about this is that we try to mitigate a whole bunch of risks. So if you look at our platform and our peers' platforms as well, we would say we believe that we have a reliable global platform. We believe we have inherent reliability built into the platform, and that failures within the platform can be compensated for by capabilities within the platform. And we believe that we're true partners with our customers, who tend to have a wonderful relationship for as long as we possibly can. But the reason this third-party risk exists, however strong our platform is, however strong that partnership is, this is a third-party relationship. This is a service that's being provided to a customer on the basis of a commercial agreement. And as we all know, no matter how great the technology is, there are all sorts of aspects in that can go wrong. We could, we and our customers could fall out with each other. We could have some kind of contractual dispute. There may be some other reason, some jurisdictional reason why customers can't work with us in a particular part of the world. There are all sorts of reasons why the relationship may not be able to continue. And I think that crystallizes out. That means that however great people believe the relationship is, they have to plan for what would happen if that wasn't there. If we can provide a service or our peers could provide a service. I think it's good to think about this in at least two modes. And I think, again, back to the engineering approach, it's good to get precise about what are the failure modes that can happen. Because with third-party arrangements, there's multiple failure modes. It could be a failure of the entity, it could be a failure of the agreement, it could be a failure of the service. And I think the right thing to do, and I think this is then entirely consistent with the way regulators are asking firms to think about operational resilience, figure out what those scenarios are, figure out the likely impact on those important business services, because many of them won't have an immediate impact. So protracted commercial failure to perform over time, regrettable, difficult to manage, but actually you probably don't need to invoke your operational resilience plan to flip to another provider within a few days. You probably need to do the normal commercial performance management type work. Whereas there might be other more profound sources of failure that drive that. So I think the headlines for me are, no matter how great the relationship is, third-party risk exists because there's more than one party involved in the relationship. The best way to think through that is to think through what are the failure modes, and then how do you respond to those failure modes. And then again, that's being an engineering company, we try to provide some technical options that will help people devise solutions that will respond to those different modes of failure.
Yeah, and I think on that very point, David, you raise a very important fact there, which is actually a lot of times organizations just look at this from a risk perspective and often forget that actually that if you look at this from an engineering standpoint, there's an approach here that allows you to not just build a world-class engineering culture, but actually also tackle the risk component at the same time, as opposed to looking at both these things in isolation. And safe to say, oftentimes organizations forget to look at this entire operational resilience discussion from that lens and just come at it from a risk and compliance angle. I mean, another important aspect there, building upon the third-party risk element and working with third-party suppliers, is, of course, cybersecurity still continues to be quite a critical risk to manage here, right? Both when it comes to issues at the supply chain level and might be perhaps related to third party, or it could also be your own internal security and compliance and controls posture. Pedro, I'd like to bring you in here because I know we often talk about, cybersecurity and the challenges organizations face there, and resilience and the challenges organizations face there, oftentimes can be two faces to the same coin, and God forbid, even potentially be a match made in heaven, right? So I'd love to get your posture here on actually how can the work organizations do to improve their cybersecurity and resilience at the same time could look to come together.
I probably wouldn't go as far as saying that it's a match made in heaven, but it's absolutely a good pairing. Let's just put it that way, because if operational resilience is the capability of organizations to deliver critical services in the face of evolving threats, then cybersecurity is a key mechanism. It's not optional. Before now, as we all know, not only are financial institutions more vulnerable, or at least more exposed to cyber risks through their complex supply chains and some legacy IT estates, but the costs of cyber breaches, they're substantially higher in financial services. So conventional business wisdom identifies cybersecurity as a cost center and as a necessary evil, and doing it well doesn't necessarily give a firm or a company a competitive advantage, but not doing it well will potentially destroy the business, or at least inflict major financial and reputational damage on a firm. I think that this thinking needs to evolve, and right now this is a good opportunity. Cyber resilience is a critical enabler to financial institutions throughout their digital transformation journeys. Cyber risks should be a priority, and not only for just the IT department, but for boards and C-suites. Changing business models and advances in technology challenge financial institutions' ability to identify, mitigate, and manage operational risk. So again, going 30 seconds back, I see this as a big opportunity because, like I said, maybe not a match made in heaven, but absolutely good pairing. They should go hand in hand. And because of my cybersecurity experience, it's an amazing opportunity for me. If we have to do this, then yeah, we're going to do it. Not just because we have to, but it allows for the cybersecurity maturity of companies to evolve drastically, I would say.
Yeah, and that's a very good point there, Pedro, because I think it's safe to say it allows organizations to perhaps bring to focus an aspect that maybe over the last couple of years is something that hasn't been something that they've prioritized from an investment standpoint, right? I mean, Pedro and David, thank you there for your insights. I'll give you both a break there for a second and sort of come back to one of the previous topics that we mentioned in the agenda, which was, whilst the regulator has put some of these policies and mechanisms in place, there are of course other trends driving a lot of these at the same time as well, right? And oftentimes all you have to do is look at the news. And a lot of organizations initially, when the consultation phase was going on, was sort of saying, well, perhaps this might be a step too far, or maybe this might be a bit too extreme when it comes to regulatory scrutiny. But I think it's safe to say fundamentally, whilst this entire discussion and policy around operational resilience is going on, there are two key trends that we also have to bear in mind that all come together as part of a single perfect storm. And the first one that I'd like to start off with are in effect operational and regulatory driven trends, right? Because if we were to, all we have to do is turn on the news, and these are, by the way, snippets that I've taken off aspects that have happened over the last 2 months, right? We don't even have to go any further than that. We can pretty much see that, all your CMA 9 in effect are usually splattered on the news with impacts to either their payment systems or providing an unreliable online banking service, or leaving, customers out to even be able to access their cash in the first place. Or applications not working or having incorrect balances, etc., etc. I'm not certainly calling out any one firm here in particular, but I think safe to say, and again, we haven't touched about insurance here. It's very much seems to be banking focused, but even in the insurance space, we continue to see the same challenges. All we have to do is just look at the recent customer satisfaction scores, and there's a reason why a lot of the organizations who happen to be more so in the fintech and the challenger space continue to have a much greater and a much higher customer satisfaction results than, say, the more traditional incumbents, for lack of a better term. Now, I think, frankly, for these organizations, a lot of the regulatory requirements from a policy perspective when it comes to operational resilience is a good thing, because all it does, it provides consumers a more reliable service. However, that only takes us so far, right? Because all you've in effect done is that you've promised that the capability and the services that you as an incumbent said you could provide, you're providing that to the terms that you initially promised the consumers to. However, there are another set of trends to consider, more so coming in from the customer side. And nowadays, customers, certainly during the pandemic, this has been even further exacerbated. Customers expect what we'd call frictionless digital experiences, right? Because no longer do individuals or citizens, us personally, look at just banking, right? We want to, yes, on one hand, we've got our value stored, the ability to hold what our actual balances are and check those out. But we've got everything from wealth management through to making sure that the financial services and experiences that we're procuring are aligned to our personal goals, through to being able to make sure payments are frictionless, not just in the country where we reside and operate, but also globally across the world. And safe to say, all these consumer demands coming in at the same time is having an impact to an organization reacting not just to their operational challenges and their operational resilience posture, but also continuing to innovate at the front end and making sure that customers are delighted on a daily basis. So I'd like to switch gears here for a second. We've talked about operational resilience, and I'd like to now touch upon the fact with regards to how is cloud and the further usage of cloud within this entire industry actually helping organizations. And safe to say, those fintechs and those new challenger banks and organizations that have been successful in this space have had cloud very much embedded with regards to their underlying customer experience and the products and the propositions that they actually provide. And Pedro, I'd like to bring you here for a second, right? Because is this an opportunity, right? Can the adoption of cloud actually be an enabler for operational resilience? And is this an opportunity for organizations? And David and Pedro, I'd like to bring both of you in here to get your opinion. Pedro, if you wouldn't mind giving yours first, and then David will bring you in.
My short answer is yes. It is an opportunity. The cloud offers a powerful, flexible solution to facilitate and streamline the entire regulatory compliance process, and it reduces the total cost of compliance. So for me, by migrating to the cloud, banks can strengthen their operational resilience and still maintain the highest governance standards. And this is very important, regardless of personnel or economic circumstances. So it's it can be agnostic if well done and planned. Of course, that's a completely different discussion. But yeah, short answer is yes, it can be done, absolutely.
And David, would love to hear your take on that.
Yeah, so unsurprisingly, I'm gonna agree with Pedro here. I mean, I think if I lend my perspective on this, I think that I think cloud can offer enhanced resilience in two ways, or in many ways, to be honest. But I tend to think of it in two main ways. I think there's the obvious way, which I probably call resilience you can weigh, in that just cloud providers just physically have more stuff than any individual institution can have. I mean, I'm going to plug Grace Hopper again. Part of the reason I'm wearing this is because Google just laid the Grace Hopper undersea sea cable from the US to Europe. Made landfall in the UK a couple of months ago. Google runs something like 30% of the world's internet traffic traverses the global network that Google lays, partly to run its own business, but partly also to provide a cloud platform again. And it's not inconsistent with our peers as well. you take that plus a number of data centers, the physical number of servers, as says, resilience you can weigh. There is just more stuff. So when things go wrong, there are just more places to go. If you're currently running a twin data center model, the operational resilience regs are asking you to think about what happens when the second data center fails, or your failover from the first data center fails, and the day that you hoped would never come actually comes on cloud. There's a lot more places to go. So that's just the physical scale. The second thing for me, and I think Pedro alluded to this, which I actually, the lifelong technology architect, I tend to think is even more powerful, is that cloud platforms offer a homogeneous, software-defined, API-managed platform, which means just knowing what you have, what state it's in, and how it's how you can manage and control it is. I would say this to somebody who's managed infrastructure internally within large organisations, say an order of magnitude clearer and easier than trying to manage heterogeneous different technology stacks with different service management layers on premise. So I think that inherent easier manageability, and I won't pretend it's not complex, so all the cloud platforms do have an inherent degree of complexity, but the fact that they are fully software defined, fully API managed, and fully explicitly declared, so all accessible as data, just makes them to me different in kind. And both when you're planning resilience and when you're responding to an event, having that level of transparency and manageability is incredibly important. So I think that if companies make a profound move to cloud, they get access to the scale, which is obviously often the obvious feature resilience, but they often don't quite realize this until they're some way through the migration, have access to this homogeneous software-defined API-managed technology platform, which, and I think just that level of manageability inherently increases resilience.
And that's a very valid point there, David. However, I'll try to play the pessimist card here, right? Whilst, of course, cloud adoption can certainly help organizations achieve that, one of the key challenges that we've certainly seen within the entire sector, so not just banks or building societies, but also insurers and those within the scope of operational resilience, they've also, on the other hand, as part of the cloud adoption journey, faced key challenges, right, in order to evidence against their resilience posture and their compliance and their maturity posture of being able to adopt cloud at scale. Do you potentially see that being a key hindrance or a key barrier to being able to increase their cloud adoption, which in effect should have a positive impact on their operational resilience?
Yeah, I think it's a barrier if people don't adapt their processes and their approach to managing risk. I think one of the things I've seen is that everybody has a control framework, and everybody has measures against that control framework, and they have some kind of ability to measure their control effectiveness. And typically their control objectives are consistent and relatively high level. Our objectives are to protect against this kind of threat, respond to this kind of incident, etc. At the implementation level, most of those controls are implemented in a way that's compatible with the technologies that they're using today. Where I've seen people manage that migration well is where they've migrated the control objectives and updated the implementation to match the technology that they're moving to. Where I've seen people struggle a bit is where they take not just the control objective, but can take the implementation as well and say, let's do it on cloud the same way as we do it on premise. I think that causes struggle in two ways. Firstly, sometimes it's just not compatible. You're using inherently different technologies, so it isn't just a straight read across. Secondly, though, I think if you just implement controls on cloud the same way as you do on premise, you miss the advantages of that this inherent nature as a software-defined API-managed platform. So, and a very practical example, is a bit off the operational resilience topic, but I'll give you a practical example. So on premise, there tends to be a very heavy dependence on deployed agents to figure out inventory management, asset management, state, etc. What do we actually have and what we're trying to manage, which is essential when dealing with a normal reliability incident or in a more profound operational resilience scenario. So one tendency is to go, okay, great, I've got all these agents on premise, I'll deploy these agents to cloud. Quite often the data that the agents are providing and finding is entirely accessible through either the explicit declaration of the cloud configuration or through APIs. So therefore, deploying agents and then imposing guess what, this comes with the cost, you're using more CPU, isn't a good read across. So I think when people do that read across, firstly, they struggle to implement. Secondly, they occasionally deny themselves the value they can get if they can be more. So I always encourage people to be really thoughtful, preserve the control objectives because they typically continue to be valid, and be really thoughtful about the control implementation. And the fact that these new operational resilience requirements are causing people to be more thoughtful anyway, to think about new ways of dealing with things, I think does allow people to kind of open their minds and think about how do we put to work all of the assets and capabilities we have available to us on these cloud platforms.
Yeah, you share some very good insights there, David. And particularly looking at the control objectives and the implementation approaches, I think it's safe to say institutions still have a long way to go to find what their sweet spot looks like. However, you've got a very valid point there in that, well, given that you're now having to go through that extra level of regulatory scrutiny with regards to operational resilience, which is quite closely linked to controls, how about you make sure you revisit them and implement them the right way when it comes to all things clouds? However, I'd like to continue my pessimistic tone here, if I can, for a second, right? Whilst, of course, the regulatory scrutiny on operational resilience continues, on the other hand, we've recently seen quite a lot of announcements, both from people close to the regulators, with regards to the challenges when it comes to the concentration power of the adoption of cloud, right? And how can the regulator make sure that the financial health, or the health, better said, of the financial services sector isn't just dependent on a set of providers, and as regulators, they're quite keen on making sure that the stability of the entire sector is something that can be assured. And of course, the level of resilience that again links back to the operational resilience aspect is something that can be met. And again, we've certainly seen a fair amount of this recently called out in the news. You can see the dates here, 12th of January, relatively recently, where there is the intent from the regulators to stepping up their scrutiny with regards to the key cloud service providers, Google, of course, being one of the most prominent ones in that space. And, again, it poses, I guess, yet another element that organizations now have to consider when it comes to managing risk, third-party risk, operational resilience, controls and compliance, and making sure that all these activities aren't just independent, but are actually considered as part of a collective set of requirements with regards to providing a resilient and a compliant service to their organizations, right? So I know Google's certainly been quite vocal within this space, David. So I'd like to understand, how are yourselves responding to this greater level of scrutiny coming in from the actual regulator?
Yeah, so I think this is and again, I think, by the way, it's appropriate to be pessimistic when we talk about operational resilience, because that's the whole point. We should think about what could possibly go wrong. So I think my reflection on this is that a lot of this is about oversight and scrutiny, and I think oversight and scrutiny is not only inevitable but also important when you're doing important things, as we aspire to do. So I think us and all of our peers in the cloud industry aspire to be infrastructure providers to the world, and if we have that kind of aspiration, you can expect to have a significant degree of scrutiny. In the same way as I always think that in the financial services sector, very heavily overseen and regulated sector, and that's a good thing, because that sector aspires to, well, not just aspires to, does run the financial system of nations and the world. So I think no surprise that as cloud becomes more prevalent and becomes more successful, that we should be held to account. I'm not going to try and make any personal predictions about timelines for direct regulation of cloud providers or anything like that. There are people far more able than me, expert than me in Google to do that. But I think that some degree of additional oversight is likely to happen. I think the stance I think we'd take is similar to the ones that I think financial services firms take, which is regulation is not unwelcome, oversight is not unwelcome. Our goals, I think, are compatible with the goals. We want to help our customers to run extremely reliable and resilient services, which is actually all the regulators asking as well. I think the thing that will be interesting to see how it develops is what form that regulation takes, because obviously financial services is not the only sector we serve, and other other regulators in other sectors like telco and healthcare and things like that will be asking similar questions. So I think interesting open question of what form that kind of oversight takes, but I think not unwelcome. I think to say like financial services firms would always want it to be principles based, reasonable, objective based. But I think that's what we can expect anyway. And I think if I reflect on the op resilience regulations, all they're asking firms to do is to think about and plan for when bad things happen and don't break the system, please. I think it's not unreasonable to ask cloud providers to think about things in the same way.
That's a very good point there, David. And I mean, safe to say a lot of the hyperscalers, Google of course included, have also taken a lot of proactive steps to help organizations with a lot of these challenges, right? All the way from things such as confidential computing through to things such as bring your own keys, and looking at various different ways at data locality are certainly all the right steps that CSPs have taken to help organizations being able to respond to greater scrutiny coming in from the regulators with regards to all things cloud. However, I'd probably say there's been an interesting debate, especially when it comes to regulatory scrutiny and cloud adoption and concentration risk, and that's the approach here of multi-cloud, right? And I guess, Pedro, I'd like to sort of bring you in here, right? From your experience, how have we seen, better said, customers tackle this, right? Is multi-cloud perhaps an approach to avoiding the concentration risk discussions or even greater scrutiny from the regulators? Are there other approaches that we've seen customers take to best tackle this?
As an approach for concentration risk, multi-cloud can be a solution. It will be a solution, I think. We're talking about present and future. We're not talking about many things that already happened. This is happening right now, and we're starting to talk about not just resilience, but continuous resilience, which is something new. I think that multi-cloud strategy is the key in creating resilience for the long term. The progress in edge computing will enable cloud-to-cloud communications to be far more effective. And after the oversight that David mentioned, which I absolutely agree with, I think that cloud will become a utility. You heard it here today, multi-cloud as a service. I see this happening. Again, I'm not going to risk a timeline, sorry, but I see this as a thing in some years. Cloud will just become utilitarian, and multi-cloud will be part of everything we do, as cloud is becoming and is already part of what we do today. I see this as the next step in the cloud evolution, so to speak. Yep.
And on that very point, actually, could you raised some valid threads in there, Pedro, which is, we see clouds as being prevalent as part of that entire journey. I think it's safe to say we've all had experiences in working with various different financial services institutions. To date, a lot of organizations, at least sort of going back 7 or 8 years, I'm going to now start to show my cloud gray hairs almost, for lack of a better term, right? Organizations were very much focused on moving non-critical workloads to cloud, right? However, as time's gone on, right, they have been asking themselves the question, actually, can we move critical workloads to cloud, given the scrutiny on operational resilience, as well as third-party and concentration risk, right? And again, all you have to do is go tune into the news and you'll see a lot of great work happening out there where you've got your incumbents partnering with fintech providers who are providing core banking systems as SaaS services, or they're the one building that for you and deploying that into your own tenants so you can manage the risk and compliance posture better for that. As part of this entire cloud adoption journey, do we see, I guess, the recent announcements on operational resilience and concentration risk impact this migration of now critical workloads to cloud? And David, I'm sure that's a question that you've been asked time and time again by institutions, right? Are we ready to move, say, our core banking systems, our payment systems, our general ledgers to cloud platforms?
Yeah, so thanks for the question. I see companies definitely have that ambition. So we are working with customers who have the goals to absolutely move those critical services to cloud. And I would assert that from a platform perspective, it's entirely possible to move those critical services and achieve a level of reliability and resilience which is equal, if not greater than, what can be achieved on premise. What I do see, though, and I think this is where companies are being very sensible about this, is that using cloud does not just mean going to the console, spinning up some assets, invoking the API, using it from the command line, etc. It does mean building some operational know-how and muscle inside the organization. So where I'm seeing our customers being thoughtful is not so much, and I won't say who this is, but because I've heard it from more than one customer as well, people say, we're absolutely convinced of the reliability of your platform. We're not yet at the point where we've assured ourselves that our own ability to operate is mature enough to move those services yet. So they definitely have plans to move them, but they want to assure themselves that they have, as I said before, they need to adapt their controls. They need to make sure that they've got some track record of operating successfully. What I've seen that lead to, I think, for most companies is what I call like an outside-in mode of cloud adoption. There's stuff which is really important but not operationally critical, things like analytics and insights, etc. The data warehouse stuff, which, funny enough, on Google Cloud happens to be a really great fit. That people will move first, that tends to not have that kind of day-to-day operational impact. And then there's customer-facing digital channels, which do have a critical operational impact, but are just, in most cases, very well engineered for a migration to a cloud platform to take full advantage of the horizontal scalability and features of the cloud. And then in the middle, you've got the core banking stuff, the GLs, the risk and payment system, etc. I think there, what I'm seeing is customers being very thoughtful about when they'll move. That is when rather than if. Also partly driven by the nature of the technology. So, I wouldn't recommend to anybody to pick up your 30-year-old COBOL core banking system and deploy it directly onto GCP or AWS or anybody, partly because you just physically couldn't. And actually, the right way to treat those kind of systems is probably not a swap one layer of infrastructure out for another layer of infrastructure. It's to knuckle down and get on with the hard job of refactoring and introducing agility, which is a whole other topic other than cloud adoption. Is more of application re-architecting. So I see that as more of the inhibitor. So, I mean, to come back to give the headline on your question, I think it is making people be more thoughtful. I think they were being thoughtful anyway. Where I see that thought being applied most is less on the can the cloud platforms provide the level of resilience and reliability. It's more on have the organizations yet, given that many of them are still only in like year 2 or 3 of their cloud adoption journey, built the operational muscle to assert confidently that they can run these platforms on the cloud. Yet they'll get there, but they're rightly thinking hard about whether they can demonstrate that experience yet.
I'd say you basically raised a feature request there, David, where if Google can run COBOL-based core banking systems, I think we can all go home, right? I mean,
you're not the first person to ask.
I mean, jokes aside, sort of though, again, to one of the points that you sort of raised there on organizations, in effect, have to get to the point of re-architecting a lot of these systems as opposed to looking at migrating some of these, because it's just not going to happen. One of the approaches that we've sort of taken with institutions is building what we call a digital core, right? A fintech core in-house on cloud that actually allows them the ability to deliver deliver change at pace on cloud, right? And as a natural consequence of that, it also helps them increase their resilience commitments because the patterns and the practices that you've used actually respect operational resilience at its very core. So, Pedro, I'd like to bring you in here, right? As part of that approach, how can organizations, and from your perspective, how do you think they could look to build this digital core out, whilst also, of course, balancing their risk, compliance, and controls commitments at the same time?
Good question. So I would like to briefly touch on the how not to do it. It's not DevSecOps. It's not a dedicated InfoSec team that does risk. It's nothing of that. For me, and I'm going to generalize here a little bit, it's about 2 things. You do have to make sure that the mindset about risk management is there, not just across the team, not across the function, but across the whole company, across the business. And then you need cross-functional capabilities that deal with risk management and security side by side, hand in hand. Another thing that it might sound like a cliche, but I keep seeing this being done wrong day by day, is the ownership and accountability combined. It's not the CISO, it's not the CRO, it's the board and all C-level. There needs to be accountability for this. And I think that it's one of the things that the FCA is pushing with risk management. It's just not the CISO that's going to be on the spotlight if you're breached or hacked. No, it's not just the CISO, it's everyone top down from the board. I speak with lots of CISOs on a daily basis, and one of them said, "Yeah, CISO, there's an ongoing really bad joke about it. CISO means career is surely over." I'm like, that's painful. It's not a joke. It makes me really sad to see my CISO friends talk that joke left and right. So yeah, the accountability needs to come from the top. Ownership, risk management needs to be built in on everything. We already mentioned, and we're going to keep mentioning risk management. It's unavoidable. I think that OPRES and good risk management have to go hand in hand. And when I say good risk management, it's not about a spreadsheet that you have with what you think it's a risk register. No, it's much more than that. It's policies, it's processes, it's controls, it's company-wide. Is it easy? No. Does it matter? No. It has to be done, and that's what I consider to be the digital core. And it's not easy, but it has to be done.
And sort of building on top of that point, Pedro, you know, also some of the discussions that you sort of said that you've heard quite a lot in the CISO community. I think one of the things that we've sort of seen a lot of times is when you're working with organizations and with firms who are looking at cloud adoption as a greater thing, a lot of them oftentimes tend to misunderstand or misrepresent actually what the regulators really do care about, as opposed to the bits that they don't, and it ends up becoming hearsay in effect. And oftentimes they end up making the wrong decisions or perhaps over-engineering parts of the solution to cater for challenges that actually the regulator wasn't even asking them to build a mitigation around. So, David, I'd certainly like to bring you in here because, as you sort of mentioned early on in the introductions, you've had the opportunity to sit on the other side of the table of the regulators and actually speak to them based on the approach that your organization at the time were taking on all things cloud. And it'll be good to have you sort of bust some of the myths with regards to what does the regulator actually care about, but also more importantly, how does Google think about this regulatory conversation, right, to make sure that organizations aren't wasting their cycle time as part of this conversation with the regulator?
Yeah, thanks. And I'd say one of the good things about my new job is that I also get to spend time with regulators in my new job as well, which is a very welcome development, because I think back when I started my cloud journey back in sort of 2016, 2017, there wasn't a lot of direct dialogue between regulators and the cloud providers. It was mostly mediated through the firms. That's still right, because regulators still regulate directly entities, but there is now a active and I'd say very constructive and productive dialogue directly between cloud providers and regulators. So I think again, I probably have to disclaim I'm not qualified to speak directly on behalf of the regulators. I can just give you my perception. But in my current job and in my previous job, I had the privilege of spending time with lots of different regulators around the world and hearing what they were concerned about. So I think probably the first myth to bust is that because the thing I hear most frequently, and I hear that in my current role, and I used to hear it in my previous role, is the regulator won't let us do X, where X is a particular use of a particular technology. Now, I'd say my experience is very rare. It's not unknown, but it's actually very rare for any regulators to make a specific pronouncement about a particular technology or even a particular category of technology. There are some jurisdictions in the world which are a bit more prescriptive about that, but most of the countries I've worked with, regulators quite deliberately avoid being directly prescriptive about technology, partly because they know that regulations guidelines have to be designed to last for years typically, and they know that if anything they wrote today that was prescriptive about technology would be wrong tomorrow. So what they tend to anchor on is principles and objectives. So whenever I hear the regulator won't let us do this, I tend to ask two questions, which is, what do you think the regulator is trying to achieve, and which bit of regulation do you perceive this constraint to be a part of? So the reason I ask the first question is I always think it's worth anchoring on goals and objectives, and most regulators worldwide have this written into their charters of, you know, what's their regulatory mission. And while I'm probably doing everybody an injustice by oversimplifying, in financial services it really comes down to two things: you know, protect the customer and ensure that the financial system operates with stability and integrity, and that's really it. And then everything is built around those goals. And part of the reason for asking about those goals is actually those aren't just regulatory goals; those should be the goals of everybody who's operating in their sector, of firms, or the people like us who serve those firms, or the people like regulators who oversee those firms. Those should be consistent goals. So the first question is, what do you think we're trying to achieve? Because I've found in most cases, when people anchor on those goals and say we're going to respect and meet those goals, then actually they'll find they're doing the right thing just by default. The second thing then is to go, okay, if you think the regulator was the one to do, where's that written down? Because the good thing about regulations, they are public, they are written. I've read more regulatory drafts and published regulations probably than I care to remember. They're not always the most readable or exciting documents in the world, but they are good in that they're clear. I mean, Deepak, you mentioned earlier on that in the consultation period for the operational resilience regulations, a lot of questions for firms was, what's an important business service? In the published version of the regulations, that's actually pretty clear. It doesn't presume to say you'll have precisely this many business services, but actually gives some guidelines. It says, you know, probably single figures to double figures of true important end-to-end business services, and they'll probably be the things that if they went wrong would harm customers or disrupt the stability of your institution. So I think the second thing is just to really anchor on what does the regulation actually say. So I think the key thing for me is, and then how do we engage? You know, again, I think this is another welcome development in the cloud industry. We have a whole team called Enterprise Trust, which has loads of experts in it, often comprises people from the sector, people from ex-regulatory bodies who do spend their time reading these regulations, understanding them, and engaging with regulators, and are able to advise customers. The thing we will do always remind people, though, is we can't make risk and regulation choices for our customers. All we can do is we can share experience, we can point to our understanding of the regulations, we can bust a few myths. At the end of the day, is our customers, is firms' responsibility to really understand the regulations. And I would encourage anybody, for example, anybody who hasn't read the operational resilience regulations that we're talking about today, go and read them. Probably take a while, but it is worth reading them, because if you read them, you come away with a clearer understanding than relying on kind of second or third hand interpretation from other people.
That's really insightful, David. And you know, I think it's safe to say, particularly as part of the entire discussion around operational resilience for the regulator, you know, there have been a fair amount of updates that the regulatory authorities themselves have actually issued, right? For example, one of the key debates was around, well, the PRA had a different definition with regards to important business service lines, and so did the SEA, and therefore being able to establish the impact tolerances was proving to be a bit confusing for organizations, right? And since then, there's been a lot of clarity where both the authorities, the supervisory authorities, have updated their actual definitions, and have also given clear guidance that, right, your impact tolerances for the SEA could be different to that of the PRA, and you can actually work with the one that's the most stringent, or the one that happens to be higher, and therefore we know the fact that if you've done that, the one at a lower threshold is going to be met by default, right? So I think safe to say there's been a fair degree of pragmatism involved here from the regulator, and at times, again, organizations tend to look at this as, you know, just a one-way street. We either do it the regulatory way or there's no other way of doing it. But I think it's safe to say if you've got all the facts and you're able to demonstrate what your thinking looks like as part of this process, it can very, very easily be managed with them, right? And that sort of brings us to the way in which actually Contino tend to manage the regulatory concerns, because we've had the opportunity and the pleasure to work with a fair amount of institutions, not just on their cloud adoption journey, not just helping them with all things control, risk, and compliance in cloud, but also actually helping them map their challenges and helping them figure out how to tackle this operational resilience challenge given our experiences in building core banking systems on cloud. And the way in which we tend to do it, and my marketing team were putting this together yesterday and sort of laughed, and I thought there couldn't be a better way of doing this, is, again, going back to the fact that we tackle this as an engineering challenge. There are a lot of methodologies and approaches that organizations can leverage that actually helps them get to where they need to get to. So the first one I'd certainly like to touch upon here is that of value stream mapping. The reason being, one of the challenges that organizations raised was, or firms raised was, they were confusing what was important business service lines versus other services that they might be running internally as an organization. So using an approach like value stream mapping actually really helps keep your focus towards your end customer and mapping important business service lines from there onwards, as opposed to looking at all your internal systems and having an inside-out approach. It allows you to have an outside-in approach and actually look at what the challenges and the impact are going to be at the customer experience level, and value stream map from there onwards. The second approach that I'd sort of like to call out, because that's the phase that organizations are now going to go into, which is going to be testing their impact tolerances. For us, actually, an approach like chaos engineering there, and of course, Google have a significant heritage and a role to play in this space, is quite key, because we found using techniques like site reliability engineering, which has the fundamental notion of error budgets built into it, actually translate quite well to concepts like impact tolerances. And using methodologies like chaos engineering have proven very, very successful in helping organizations test their impact tolerances, and thereby by default also testing out their error budgets and knowing how resilient their services actually are. And the good thing is, again, you don't always have to do these at production systems or have to do as a big bang. You can start to test those gradually across your entire estate and start to build that internal resilience posture and that resilience muscle memory, for lack of a better term. And then the third bit, and Pedro touched upon some of this, we've all been used to doing assessments on aspects such as spreadsheets, but we all know that's not realistically scalable, and it's not something that allows you to have a real-time view of security posture of your environment. So using modern technique with regard to observability, so we're not talking about logging here, we're not just talking about traditional monitoring approaches here, but we're actually talking about observability as a whole, really allows you to know what does the resilience posture across your estate looks like. And using things such as semantic monitoring actually is, again, really quite strong in making sure that organizations know what the impact to their end customer looks like, as opposed to the downstream impact just to their systems. Because guess what, if you end up focusing on your customer and the impact to them, you will naturally make sure that your underlying systems are architected in a way that they're operationally resilient in its very core. So to sort of summarize, I guess, that the Contino way, or the Contino approach to looking at this, we just always tend to say focus on your customer. That will really help you identify what those critical and important business service lines are. Make sure you can optimize your actual value stream, and that's where things such as observability, SRE, and chaos engineering come into play. And again, going back to Pedro's other point, this is a cultural thing as well, right? Operational resilience isn't just something a risk team or a controls team or your internal regulatory team, however you structure this from a roles and responsibility perspective, they aren't the only ones who have to cater for this. This has to be fundamentally baked in to the culture of the organization to make sure you can continue to provide resilient services as you go about. And that sort of leads us to the last section, right? So the last section that we're here to sort of talk about are some of the patterns and practices that we see being successful within the space going forwards. The first one I'd sort of say is building a resilient fintech core is quite a key one, right? So organizations who are thinking about how to build resilience within their systems, we actually tell rethinking the way in which the fundamental core of the platform is built is critical. And the way in which we sort of tend to break it out is organizations might have traditional core legacy systems, system of record, customer operations platforms, but actually by building out a fintech core, ideally on cloud, because that allows you to deploy these fairly rapidly, you can start to build integration layers regardless of the actual services you're trying to provide. Let that be retail banking, pensions, insurance, ISAs, commercial banking. You can actually start to build out this core on cloud that is scalable and resilient in its very nature. You can front that by things like mature API-based services, And actually, this is where you can now start to provide just different interaction points for customers. This could be via online banking, it could be via open banking, it could be digital marketplaces, it could be customer portals or developer portals. And actually, you can start to provide this omni-channel experience, both not just for your internal developers, but also start to open it out to your partner ecosystem, but at an aggregation level, or them actually providing services as part of a potential digital marketplace that you would like to build. I mean, the one thing I'd sort of like to do here, Pedro, I'd sort of like to call you out here, because one of the things we always talk about is, whilst you're building out this fintech core, leveraging modern engineering practices is quite key. You know, it could be synthetic monitoring, observability, chaos engineering, zero trust. I'm keen to get your insights here really quickly before we move on to the last point.
A cloud strategy and a roadmap with a framework, I think, are basic necessities for all of this to work. Just because an organization is compliant with, let me throw some names, ISO 27001, 27015, 2770, and that doesn't apply to this specific situation. I believe that the framework and the strategy need to be bespoke to a company's needs, and you can't reuse something already done. You have to create something that fits the company. Regarding zero trust, I'm looking at it and I'm seeing something that has been bothering me for a while. Zero trust is on the, everyone's talking about zero trust, right? I've seen companies that implement one zero trust product and suddenly they think they are zero trust as a whole. No. And this is why I think that this is a transitional era, because zero trust is good. Yes, it is. Can it be done? Yes, absolutely, it can be done. You acquire a product, you implement a product, and you think you're zero trust. Some mentalities still need to change, and these are the gaps that we've been finding, and I've been finding since I heard zero trust for the first time. It's about the definition of everything that's going to shape our future in the next 5, 10, 15, 20 years. Chaos engineering is another one that I don't want to talk about chaos engineering because I would talk for a long time, but from all of these, zero trust for me is very important because I've been doing it for a while, and there are some fallacies in the definition of zero trust. The good thing is that many people want to do the right thing. The not so good thing is that many people are doing it wrong. But yeah, this will all evolve in the next few years. And according to the FCA, we all have until 2025 to have everything done. So clock's ticking.
No, cheers for that, Pedro. And certainly right that there are a lot of misconceptions around a lot of these techniques and approaches, and zero trust has been sort of one of them. But the other one I'd certainly like to highlight is the role of multi-cloud, right? Because safe to say, whilst Google, as well as the other cloud service providers, have done a lot of work in allowing for multi-cloud as an approach and as a strategy, we've often seen organizations not implement multi-cloud in the right way, because done the right way, it can help you not just with your core cloud strategy, as well as with your core architecture, but certainly provide a more than capable approach, as well as the ability to test out scenarios that certainly help answer some of the regulatory challenges from the SEA and the PRA with regards to cloud adoption within this sector. I'm sort of conscious of time. We'll go straight into Q&A because we do have some questions come in from the audience. Some of those have actually already been answered as we've been going through, so I'll skip some of them. But David, I've got one that I'd like to get your perspective on, right? Which is operational resilience on one hand, and outsourcing risk and third-party risk, which is where I guess cloud very much would come in, are often confused in the same conversation, right? So how would you recommend organizations manage their due diligence and risk management across both these domains, op resilience on one hand and outsourcing and third-party risk on the other?
Yeah, so and you're right. I see these things being mixed up a lot. I think it's partly because two bars raised at the same time. So last year the PRA published both the operational resilience guideline, operational resilience requirements, and published a new version of their outsourcing guidelines as well. And lots of people have thought, well, one they're both associated with cloud. So I think the way I would think about it is operational resilience has to be thought about as a holistic need. it doesn't just apply to cloud, it applies to your entire estate. And I would say, and I'm not just saying this because I work for a cloud provider, that if I think of the amount of stuff that companies have moved to cloud so far, which while it's good and growing, it's still for most firms still in kind of single-digit percentage of their estate. Their big operational resilience risks actually really lie on premise. And I think Pedro is exactly right. Right at the beginning of this conversation, we pointed out that operational resilience is not business continuity, it's not disaster recovery, it's not tightening the screws in firewalls. So I think a lot of firms still have to think about what do they need to do to go beyond their current on-prem arrangements to achieve operational resilience for these important business services that they can't do today. And some of that may not be achievable on-premise and cloud. So I think the operational resilience is a holistic problem that encompasses everything, and also not just technology. It encompasses all those other dimensions the PRA points to as well. Third-party risk and outsourcing risk is focused on the ecosystem, the supply chain that technology firms use to rely on that. So it's an important dimension of risk, but it's only one dimension. I think for me, the thing that helps cut through this is, and again, this is in the recommendations and the requirements from the PRA, is to have a very scenario-based way of thinking about this stuff. So the operational resilience regulations require that people think about, I think the terminology is severe but plausible events. So I think the way to cut through is, okay, what are those severe but plausible events that need to be catered for? Then if you take that event, worry about the event before worrying about is this an outsourced thing, an in-source thing, an on-prem thing, or a cloud thing? What's the impact? What are the business services impacted? What's the response? Is the best way to think about that. So for me, op resilience is the big envelope. Third-party risk is a still big but smaller envelope within that. You need to manage third-party risk for normal conditions of reliability as well as the big events of operational resilience. But for me, coming back to the question, what could go wrong and how can we respond to it, is always the clarifying question to me.
Yeah, and actually couldn't have fared any better, David, because if we look at it, to your point, operational resilience is the entire wrapper that organizations almost should take care of. And third-party risk is a small component to it. Going back to Pedro's previous point on cybersecurity and zero trust, that's another key component to it. But actually, if organizations manage to layer these activities in the right way, they could look to be addressing multiple regulatory challenges at the same time, as opposed to looking at a lot of these in isolation, right? So certainly very, very valuable insights there. I'm very much conscious of time. I think we're pretty much running now towards the end of our session. So first and foremost, a massive thank you to our core speakers, Pedro and David, for joining us today and taking out some of the time from their valuable diaries, but also, most importantly, a massive thank you for all of you in the audience who've taken the time to join us today, especially given the early morning start that we had. Towards the end of the session, we did have one last thing prepared for you. So actually, last year, we had created an operations resilience dashboard. And given a lot of the challenges that we were actually seeing in the industry, we actually open sourced that. So if you would like to learn more around that, please do go onto our website and you can see the operational resilience dashboard available there. A lot of the insights that David Zoncha mentioned from a Google perspective, all you have to do is go onto Google and Google Cloud Operational Resilience, and you'll see all the great white papers that the Google team has also published with regards to also all things operational resilience as well as cloud adoption. And finally, again, thank you all for joining. And if you would like to join and you are interested in more topics that we as Contino are looking to cover, our Contino Live extravaganza in the month of February still continues. So in the next couple of weeks' time, I will be having the pleasure of being joined by Form 3 as well as Pay UK to look at how can we build a cloud-native payment stack to unlock a seamless payments and customer experience. So if you are interested, that will be running on the 23rd of February, where we look forward to seeing you all again. So thank you all for taking the time. Pedro, David, thank you all again, and look forward to speaking to you all soon. Thank you very much and have a great rest of the day.
Thank you. Bye.
Thank you. Bye.